should be celebrating.
Welcome back, Niraj. So it's been I think the bits of August you've missed have been a bit painful in the sense upwards, but very, very slow. People have had to work for their profits in this market.
Good now to have a markets like that. But typically, I call me superstitious or whatever, but history has shown that if the markets were in a turmoil, then during Ganesh Chaturthi, the markets show a bit of a buoyancy. The markets haven't been in turmoil. Let's see, but if there is continued buoyancy in the run-up.
There's a lot of things that have stood out, right? So while we may have been slow and steady, and I know Tamanna really is like, this needs to be quicker, but the fact remains volatility was controlled. You had sectors doing well that we thought had more over and done with their rally, right? Unfortunately, the only negative that's standing out for me is what's happening on Bank Nifty. They're just not finding the support that they need. And if you've got to scale to 25,500, Bank Nifty will have to pull its weight. So the hope is, and I think this is the trade that most people we've spoken to in the last few days have said, that buy Bank Nifty for September. Because only if that moves up will the Nifty move. But what also really did well is pharma. Quietly and slowly, we've been focusing on IT, but I think the story really has been how pharma stocks have done this month.
So just talking about August, and we pulled up how August performed, a bit of a review before we get to September, how August performed in all of, how markets performed in all of August. So Nifty was up about 1.1% through the month, Sensex up 0.76%. Really, it was only the small cap index which was okay relatively at 1.24% up over the month. Mid cap was flat, 0.3% over month, and Bank Nifty down 0.39%. So it's a very forgettable August. Let's hope September is slightly better. But should we get to the global cues? But let's get a setup. We have so much to talk about. GDP data came over the weekend. We'll unpack that. We have the Bajaj housing finance IPO to talk about, and of course the big Gujarat gas deal. But the global cues first. Friday was decent, an up move for markets, for US markets, because of the PCE data, the inflation data, which came in completely in line. The Dow hit a record high at close for the S&P 500. It's been a fourth straight month of closing up, but it's getting a little tired. July inflation data completely in line with expectations, so that was good. I'll quickly run you through it. PCE, the personal expenditure, rose 0.2% month-on-month, 2.5% year-on-year. That's what was penciled in. The bond yields post that, then of course, just saw a very slight move up. You saw a quick look at how US indices performed through that month, and S&P 500 leading the charge. The rest fairly okay, but all up in the green. 3.9% on the 10-year. Crude trending lower, because one interesting development over the weekend is reports that OPEC Plus could look at increasing output from October. So that means more supply coming in. So despite the Libya supply disruptions, that means that crude could continue to trend downwards. You're seeing the NYMEX down about 1%. Asia is pretty much mixed as an open, because the data coming in from China, the PMI data coming in from China shows PMI at a 6-month low, and which is why Asia is iffy over there. Nikkei down, up about less than 0.5%. Let's look at the implied open for India very quickly and see what kind of a morning we are setting up for. Just completely flat. No fireworks in September yet. We'll hope and see if the rest of the day picks up. But right now you're looking like you're set for a flat opening completely. Fund flow on Friday, because remember, the end of the week last week was fairly good, and you had foreign investors coming back. Now I think that's one trend to watch out for. 5,318 crore rupees of buys from foreign investors only on Friday, on the last day, trading day of August. Domestic investors sold about 3,198 crores. So that was sort of the global setup, and we'll have a deeper dive into it in a bit. But here locally, Niraj, I think finding a reason to gain some steam will be one reason. And do you think GDP data will weigh at all on the minds of investors?
Not, and maybe not also, because I think some of the notes, and I'm sure we'll discuss about it in detail, but some of the notes suggested that it's largely come in line as well. At least I read Upasana and Pranjul, and they seem to suggest that that is the case. But, Tamanna, actually, we'll get to the GDP in a moment, but just the statistics, what Samina started off saying, a stat like this, that 12th consecutive session, the strongest rally since inception. These things, guys, don't happen because some traders are coming in and just mopping the markets higher, right?
So very stable up more.
Yeah, and it was an August 10 for S&P as well. I was reading a statistic that never before in history has the S&P 500 gained 25% in the preceding 12 months to a rate cut easing or rate easing cycle. It's been very strong for the US markets as well. So in some sense, a combined up move there. So momentum in favor.
And also I think one thing, Niraj, if you talk to the tone of fund managers now, I think everyone who's sitting on the sidelines now suddenly is beginning to allocate. And you're seeing that on portfolios. So if you see the July portfolio, and I'd like to see what happens in August, but things are turning the corner because usually when you sit on SIPs, you're either waiting for a price correction or you do a time-bound correction, right? In this case, if price has not happened, you have no choice but to go out and allocate.
Yeah. So, very valid point as well. And I think it'll be great to talk to some fund managers on this. We're going to talk to Abhay Agarwal today, who was sitting on a bit of cash as well. So it'll be lovely. But here's the trade setup. So momentum in favor. No reason to take the foot off the pedal, at least I believe so. FI flows in the primary market are the highest since 2021, making listing gains such a lucrative opportunity. So many people are now doing that. What used to happen in the previous bull market is just flip for listing gains. And our colleague, Sai Arvind, has done a fantastic story on our website. You want to go in and read that as well. Fabulous data about how FIs have made a beeline for the primary market. So that's the second thing. But words of caution. September, the month of September, since 2018, has seen alternate years of gains and losses. Every year, gain one year, loss the other year. Then the gain, then the loss. 2023 was a year of a gain. Could 2024 be a year of loss? That's one. And guys, 8 NFOs, multiple IPOs this week.
Yeah.
That could suck out some serious liquidity. I know we'll talk about it in detail, but 8 NFOs and so many IPOs. So that's one. And lastly, Harish Krishnan of Aditya Birla Sun Life put out this amazing data point, and he is saying that not in history has this happened, that the number of stocks on the Nifty 500 with a P multiple over 50, nearly 50% of stocks on the Nifty 500 are trading at a P multiple of more than 50 times. This makes the broader market terribly expensive. So very expensive market. But still think there's still
things
some
have changed.
left.
Niraj thinks the market is expensive. This hasn't happened in a few months.
No, market has been expensive, but I still think that the momentum is in favor.
So I think one more thing that we should be slightly mindful about is, remember, this is the last month, and remember from 1st October, the taxation on buyback is going to change. So you would see, remember in August, you had 6,000 crores of buybacks that hit our market. This month, we'll see an escalation of that number. This is because from 1st of October, the buyback or the inflows or the buybacks were charged to the companies, which will now move to shareholders. So I think this, again, could be one sentiment you want to watch out for, because you might have companies that might look at exiting treasuries in order to pay out some of their shareholders to avoid that taxation liability up until 1st October. So that's one more thing. We don't talk about this often, but this is something that India Inc. is currently dealing with. Very often, while Niraj talked about how it's the season of NFOs and IPOs, it's the season of block deals, and that's one big reason why you may even see the FI number that we highlight for you time and again, because that's where the buying is largely coming in. But that's one factor that I'd watch out for largely. Talking about the markets, Niraj, while we've had it good. I think we've had it pretty good, and I've genuinely been circumspect on this market for a few months because it was looking expensive. You had funds that were sitting on the sidelines. Large portfolios were not willing to go all in for fair reason, right? Earnings have also largely been in line. There have been no upside surprises. But the Nifty is up 16% year to date. We have borrowed returns from the future. You can't take that away. I think the big question to ask now is, Nifty higher now or Nifty higher in December? And I've been doing this with some of our fund managers, and most surprisingly have said higher in December.
Yeah. No, I don't know. You'll have the Fed rate cut by then. Perhaps Governor Das gets a little prodded by the GDP data to also look at rate cuts. Just a quick word on GDP and what Governor Das said before we get to stocks, because I think that's an important thing that happened over the weekend that we should quickly address. So what happened is that India quarterly GDP came in at a 5-quarter low. the number which came in for the April to June quarter. It was below estimates. It was expected that it would in fact be lower because of base effects, etc., but it was still below estimates. It's grew at 6.7%. If you compare to the previous quarter, it was 7.8%. Quite a few factors over there, guys, which were expected. So you had elections, less government spending as a result. Agriculture was slow at 2% growth versus 3.7% year on year because you had heat waves and all of the above. Manufacturing, though, zoomed at 7% for the quarter versus 5% year on year. But I thought the conversation or the comment from Governor Das was important, Samina.
And just before that, I think private consumption has done well. So if you're looking at precursors to what's expected going ahead, the fact that service is looking better, private consumption is better, but of course there are some who've gone out and said that we need a rate cut, and if you don't get that rate cut, the recovery, but I think that's being a little overdone, given that this is cyclical, this is seasonal, you had the budget, you had elections.
It's also telling you when government doesn't spend what the economy looks like.
Private consumption is seeing early signs of pickup, so I would take heart from that, and also there are measures in the budget on the MSME side. That gives me hope that manufacturing and service will pick up. We are seeing green shoots in terms of rural. Now, the flip of it is you saw the earnings. Corporate India is still not being able to contribute as much. So while there is a point, but I don't think it's all dark. I do feel like Moody's has upgraded us in other news, which is also a big positive.
Yeah, so lots of positives, but let's get down
and
to
Forex
stocks.
Reserves at record high.
I just want to play out what Governor Das said,
quickly,
because that was an important bite. His comment on the GDP data and why you should not worry is just important. We'll quickly hear that.
Reserve Bank's projection was 7.1%, but actual number which has been given by the first advance estimates given by the National Statistical Office is 6.7%. Now, obviously, 6.7%, would give an impression that, it is lower than 7.1, goes without saying. But if you look at the components of the GDP, the main drivers of the GDP growth, whether it is consumption or it is investment, or from the supply side it is manufacturing, services growth, construction sector growth. I think all the sectors, the growth is 7% plus in the first quarter. Two aspects which have slightly pulled it down. One is government expenditure, which is both central government and state government expenditure, perhaps due to the election season between April and June, and the operation of the model code of conduct of the election commission. Government expenditure was lower in the first quarter, and when I say government expenditure, it is both central and state government expenditures. But going forward, we would expect the government expenditures, that is both state and central government expenditures, to pick up and provide the required support to growth. The other thing which was slightly lower was agriculture, which grew, I think, at about 2% or so. But first quarter, it's the second quarter really. Second quarter onwards, from July onwards, the monsoon has been very good. And
well, we're hoping on rural recovery, a better monsoon, and hopefully the GDP number starts looking better sooner than later. Forex reserves also at a record high for India. Well, implied Nifty is indicating to a flat start, keeping in line with global cues and the fact that we've actually had a pretty solid August despite what we saw on 5th August. In terms of stocks, the big story this morning remains what came out on the weekend with the board is Gujarat Gas and GSPL, where the board has approved a scheme of arrangement involving Gujarat State Petroleum Corporation, GSPC Energy, Gujarat State Petronet, merging into Gujarat Gas. Now, let's take you through what the scheme is and what the rationale is. The scheme, of course, is on your screen. It will tell you what the merger is and who merges into who, and what, of course, the outcome of that is. Remember, the Gujarat Gas holds enormous number of assets. The idea of really consolidating and simplifying the structure is the core reason why they've gone out and done this scheme of amalgamation and, of course, simplification of the group companies. A couple of things that stood out for me is that the combined cash flows of the firms will, of course, fund organic and inorganic growth going forward. Their businesses will give them pricing power. They will create a gigantic entity in itself in the gas space as well. But what you want to keep in mind is that Gujarat State Petronet which there aren't too many brokerage notes on in terms of what their opinion on this deal is, has already ran up 23% in the last 5 days. Clearly, the markets might have had a whiff of this. Most believe that the upside from here could be capped largely because the stock has run up. This is expected to be a lot more accretive in terms of top-line margins for GSPL. Gujarat Gas, on the other hand, remember, post their earnings in June, there were a bunch of downgrades that came in. Gujarat Gas is one of the most expensive gas distribution companies in the world, we believe. Their numbers were not very impressive. The dependence on Morbi as well was a concern for Gujarat Gas for a whole lot of brokerages. What has happened in the counter post its earnings, it's corrected substantially. This morning, brokerages do believe that while this could be margin accretive for Gujarat Gas, they've still downgraded the stock. So they do believe that there could be some simplification, intercompany costs could also reduce, which will help their margins, but they don't seem too convinced about what it's going to do to the stock in the medium to long term. It was always expensive. The dependability on Morbi is a problem. From what I believe, PNG volumes coming out of Morbi in the September quarter could see a significant decline of 30 to 40%. So those are reasons why brokers and traders are not too big on Gujarat Gas. The stock is sold off. GSPL, on the other hand, has run up, and hence the upside is capped, even though this is good for the business. In terms of stock movement, very likely that GSPL may continue to see some follow-on buying like we saw last week. Gujarat Gas, on the other hand, may rationalize a little bit, but no major upside expected because brokerages aren't convinced. Numbers were disappointing, and it is expensive. So, despite everything else, this is one of the most expensive gas distribution companies in the world at 22 times.
Yeah, so most people don't sound convinced, but GSPL as well, which has that 5% arbitrage, but has rallied 38% in the last 15 days.
And 23% in the last 5 days, I mean, that's significant.
Is it buy the rumor, sell the news?
And if that was the case, then we'd see what happens to the markets over the next couple of weeks. But I think this one's important to track, and it's also important to remember that why you're seeing what is happening on Gujarat Gas, right? With the whole Morbi piece, even though this will simplify the assets, operationally, it may not be. It is a tough business for them at this stage, and it's an expensive stock. Well, the other ones that I have an eye on is NBCC, and the reason I mention this is because, Niraj wasn't around, but Tamanna and me were tracking this one. There was news early last week that they were going to do a bonus issue, and the markets got very excited, rewarded the stock significantly on Tuesday. Come Wednesday, there was a correction. Thursday, the stock picked up. Friday, it corrected. So there was a lot of confusion around what that bonus issue would be. Unfortunately, the bonus issue may not be as good as existing shareholders would like. They've approved for every 2 shareholders in the company, you get 1 bonus issue. So if it was a 1:1, you'd have seen a good positive reaction. But because of that uncertainty around it, it's had a volatile last week. And if I had to put money on this, I think the stock would see another down day in trade today because I don't think investors are going to be too impressed by the bonus issue deal. The other one is a quiet one, Biocon, and I'm highlighting this because pharma has been such a sweet spot to be in, right? For the last week, for the last few months, it's slowly and gradually moving up. While we've been focusing on IT, it's actually pharma that's had a good run. Even last week, pharma index was up about 3.5%. They've received a pretty significant approval that's come in for a drug called deptomycin, which is used to treat skin infections. We will understand the size of the market on this one and bring you more analysis on it, but sentimentally a huge positive on Biocon, I believe. So GSPL up, Gujarat Gas down, NBCC down, Biocon up. So it's a good mix.
I don't understand why bonus issues excite investors because it's not like it's the same value of the share split. So even
if it's a dividend paying company, it's
even RIL, I mean, it was a pretty tepid response to the bonus issue at the end of it.
It really depends on who's doing it. CDSL last week, the markets loved it.
There must be other reasons to come in. All right, so what do I have on my radar? Let's start with auto stocks. All the sales numbers came in August. So big picture over here is the second straight month of sales numbers actually coming down for OEMs, for auto companies. One of the reasons is strategic. They have more inventory pile up at the dealership, so they're strategically letting less stock out of the factory gates. Let's put it that way. But if you break it down as per what it means for each company, TVS, I would say, is a thumbs up because they've outperformed their estimate of a 9% growth for sales in the month of August. Maruti sales have actually dropped lesser than expected. It's de-grown, as they say in the industry, at 3% versus 5% expected. and as per strategy. So I would actually say that's a thumbs up, not a thumbs down. Tata Motors commercial vehicle sales dropped 15%, higher than expected. That's a thumbs down. And Eicher Motors saw a drop of 5%, which will also perhaps not be taken too well. So that's the auto pack. Of course, the other ones are the Bajaj Fin and Bajaj Finserv story. I mean, through the week, all of last week, the buzz with Bajaj Fin and Bajaj Finserv was just really phenomenal. Look at it, last whole 1 month is about 7% as well. The news that has driven it is finally out. Bajaj Housing Finance IPO has been announced. It could further excite investors. It's a classic value unlocking for Bajaj Finance, and of course the holding company Bajaj Finserv. While it's also interesting, it's a 6,560 crore IPO with a fresh issue of 3,560 crores. 500 crores of that is reserved for existing shareholders, and Bajaj Finance will benefit from the OFS, offer for sale, of 3,000 odd crores. So that's straight in. Money coming in for them. What you need to look at, of course, is the recent run-up. Is there more steam left, and valuations as they come in? So that is something that investors will gauge. But sentimentally, since the news has come in, you could see a bit of an upside today as well. The third bucket of stocks are the newly minted Navratnas. So a few more have been added to the list. Solar Energy Corp, Railtel, SJVN and NHPC have all received Navratna status. So apart from the sentimental boost, why it matters is that if you're a Navratna PSU, you can invest up to 1,000 crores or 15% of your total wealth in a single project without needing government approval. So it just gives you a little more agility in terms of strategic moves as a company. So these are some, I don't know, the PSUs have not been the favorites. Will this give them a little boost today? At least SJVN, we'll have to wait and see.
Let's wait and watch. Century Textiles, just watch out for that one. One stock before we go to Manpreet. Unit Birla Estates in co-development pact for 131-acre land parcel in Noida, Uttar Pradesh. This apparently is a big one. So watch out for some bit of an upside on open for Century Textiles. So let's get in Manpreet Gill, Chief Investment Officer of Africa, Middle East, Asia and Europe at Standard Chartered with us. Manpreet, thank you so much for waiting by patiently. We just had to finish off some of the stocks before we get to you. So really appreciate this, you joining in so early in the morning. Manpreet, but it's great to look at mornings these days because across the world, risk assets seem to be moving higher in anticipation of the rate cut or the easing cycle. Are you constructive risk assets like equities, or are you cautious?
Morning. Yes, I think we are constructive, but I think we're looking at exactly the same balance to say, look, economic growth, earnings growth, all of that argues that risk assets should remain well supported. And the fact that we're getting now to the point where Europe has already, major central banks in Europe have already cut rates, the Fed, in our view, will start cutting rates. That should all be a big tailwind. I think what we're trying to balance that is, how much of that is already in the price. Because if I look at, the market expectations of Fed rate cuts, a lot of those are already in the price. And that's, of course, coming at a time in the year when September seasonally tends to be a much softer month. And obviously, we have rising uncertainty in the form of elections, geopolitics. So that's the reason why we've taken a little bit more of a balanced approach, saying, look, the baseline path still is all of these factors, particularly rate cuts, should prove to be a tailwind. But we just want to balance that a little bit more than usual with, owning high quality bonds on the side and indeed gold. So I think that's really the way we're positioning ourselves at this point in time, particularly after being overweight in a year when equities have done very, very well in India, but indeed almost in all major markets around the world.
Keeping risk reward as your backdrop and a Fed rate cut around the corner, buy the news, sell, or buy the rumor, sell the news. What are you doing with India? We've done well. We've done decently well year to date. Everything seems under control. What's the trade on India right now?
Well, I think on India, our regional views haven't changed. I think what we've done is sort of trim at a global level, just how large our exposure to equities is. But within Asia, in our view, the case for India remains, or Indian equities remains pretty strong because it's still, in the region, the market where earnings growth and economic growth is most compelling. Yes, you do pay a price in terms of relative valuations, but we still think that's far more compelling than, more inexpensive markets in North Asia. But in North Asia, in China, we still have growth concerns. How that sort of policymakers balance out the need for supporting growth with the ideally an avoidance of reinflating more bubbles, and many other regional markets are more sort of sector specific. So Korea, Taiwan, of course, being more semiconductor sector specific. So in that context, we think Indian equities still stand out quite positively. We still like Indian bonds as well. So we think India is not just an equity story. The bond yield is still attractive relative to other emerging market local currency markets. So on both fronts, we still think India makes a compelling case on regional grounds. I think it's just about how much risk you want to carry at this point in the year, especially after both have performed quite well year to date.
Manpreet, just getting your sense of the question of valuations, and we keep talking about it here from a global investor interest perspective also, it becomes a big conversation. Is it such a big deal right now in terms of how richly India is valued in terms of equity?
Okay, something we do need to watch quite closely because, look, on the positives, in rising markets, usually valuations go up, right? We see that in every cycle, nothing wrong in that. Investors usually will pay a much, much higher multiple for a positive story. And usually in emerging markets, you tend to see the average rating sort of get re-rated higher as the longer term outlook improves. The other way we've been looking at it is to say, are valuations justified by current earnings and productivity? So looking at price to book versus ROE, actually Indian equities together with the US, they stand out as having elevated earnings, but arguably they're justified by the higher return on equity compared to what you get elsewhere in the world. Now, there are some longer term questions of, okay, if you add more of these valuations, what does that mean for the next sort of 10-year type returns? But it's not a reason by itself to say, look, don't add more today, because it doesn't tell you anything about the next 6-month return. So we think they're on the elevated side, no doubt. It's something we want to keep a close watch on, but we do think they're justified by the return on equity. We do think they're justified by the growth outlook. So I think it's really about balancing it together with all the other factors rather than worrying about valuations alone.
Thank you, Manpreet. We'd have loved to chat with you longer. Hopefully, we can have an extended conversation closer to the Fed rate cut. But until then, have a good week and we'll see you soon. Well, that was Manpreet, of course, breaking it down for us. So while we're so stuck up on equities, it does seem like bonds, Indian bonds, is what global investors like. We should be taking some heart from that, because that seemed to be an important talking point in the early part of this year after India's inclusion on a couple of those international indexes. But from global to local, and the local big talking point this morning is going to be auto sale numbers that have slightly or rather disappointed the street. We have with us a research analyst, Mumukesh, joins us from Anand Rathi. Mumukesh, pardon me if I pronounced your name wrongly, and please correct me and tell me how I should pronounce it. And also, what have you made of those auto sale numbers? The street may not be very enthused because there's been some degrowth, especially with the likes of a Maruti.
Yeah, hi. Good morning, everyone. My name is Mumuksh. And so just on the volume side, so I would say two-wheeler PV were broadly what we expected, where two-wheeler for industry would be, say, high single digit, and the PV would be a slight decline. While I think disappointment a little more on the CV side, where decline was more than what we expected, somewhere high single digit fall. So here on the CV side, I think the post the election, we had the infra capex activity yet to pick up, and as also some unfavorable base there. So again, that will change will get better in second half. So again, I think CV should again pick up in second half. So that's how I view this month for all these segments. While tractors numbers are not yet out for the available yet.
Mumuksh, hi, morning. Tamanna here. Just want to get a sense of whether this whole narrative that this is as per strategy, right? A lot of companies wanted to reduce their output or their sales this month because of inventory build-up. Would that be seen as a positive at all, considering it's at the end of the day talking about demand getting a bit sluggish? Yeah. And then let's break it down and let's start with two-wheelers on which ones look decent to you in terms of the numbers you've seen.
So in two-wheeler, I mean, Hero was around 5%, TVS was double-digit, just Eicher was muted, a slight decline. So in two-wheeler, I mean, it was what we expected. And I think Bajaj and Honda should also do well. So Two-wheeler should remain at high single digit. There, the momentum continue to remain strong. Yeah, and PV, obviously, there's a lot of high base there. PV has seen a very good cycle over the last 3-4 years, and now I think the high base, there's some moderation in demand. So, I mean, PV this year obviously will be a little muted here. And as you mentioned, there has been some inventory correction, like of Maruti has corrected for like few days of inventory correction. So obviously, I mean, this year we see PV to be soft year, while two-wheeler to be robust, and CV should pick up in second half. How I see for the segments.
Mumuksh, just want to get your take specifically on Maruti. There was degrowth of about 3%, but a little less than how it was expected. Do you think the street will see that negatively today or just muted?
I think neutral would be the thing, somewhat neutral, because it's not, I mean, obviously it's a decline still, and though, so I would say it's a neutral thing for Maruti. For Maruti, I think going ahead, I think obviously this year is a bit challenging for the industry itself. So for Maruti also would be challenging. But again, say next year onwards, with demand picking up, they should also do well. And also now with the hybrids getting more focus, and the new launches in hybrids could help them do better over say next 2 to 3 year perspective.
Mumuksh, morning. Just seems to be that four-wheeler companies, because even Tata Motors four-wheeler, the car numbers also declined 3% independent of the fact that CVs were weak. So would it be fair to assume that four-wheelers versus two-wheelers till the end of the year, two-wheelers might be in a slightly better space versus four-wheeler companies? And if so, what is your pecking order?
Sure. So how I see that two-wheeler will grow in double digit for this year as well. And also for next year also, we are factoring a double-digit growth for two-wheeler. So where the two-wheeler names remains a preferred pick in the OEM pack, along with the Hero as a best bet. And while on the PV side, we particularly like M&M, where though I mean industry is soft, but they will do a double-digit growth, and there the tractor is seeing a cyclical recovery. So that would be the name we like. And also with the CV cycle would somewhere get bottoming out and should see recovery from second half, then the Ashok Leyland also looks good at current levels. So this would be the picks in the OEM space.
Quick follow-up here. So the expectations are that this month M&M tractors will show, or the month gone by, M&M tractors will show a decline, maybe 15%. That's the consensus. Your numbers may be slightly different. But my question is, we know Tata Motors CV has shown a decline, 13%. M&M may show a decline between 10 and 15%. You are baking in a recovery starting the festive season of sorts for CVs and tractors.
So yeah, so that's what basically trend-wise we see a reversal. I mean, generally, post-election things pick up in CV side, and because of obviously election, the capex and the infra got slowed down. So there we expect a change. And again, on Q4 of this year, there's a lot of favorable base for the MHCV cycle also. So that also will help them. Buses are doing really well. So buses itself growing at 20% can add a 2 to 3% growth for the MHCV. So I mean, all these factors should see a positive growth, a good 5% positive growth for the MHCV for this year. And then obviously it should continue next year as well.
All right, thank you so much, Mumuksh. Great speaking with you. So auto in focus, a whole host of stocks in focus this morning. But let's get the F&O outlook with Agam, who's joining us now. Yes, Agam.
Well, right. Well, Friday was a great day of trade because we ended on, well, another life high, and that's where the Nifty is right now. And while we have seen a little bit of positive traction, we're also seeing a little bit of unwinding when it comes to the bank Nifty. So we're interestingly poised at the moment with the way things are panning out. So let's start by taking a look at the Nifty futures. The September futures adding about 5.2% in open interest, even as the index advances by around 0.4%. And moving on to the bank Nifty futures, we've seen unwinding of around 1.5%. Not too much to speak for otherwise there. there. All in all, it's still fairly quiet, though we're looking at new life highs for the Nifty 50. And speaking of new life highs, have we seen a change in the range that we're expecting and working with? Yes, we have. On the higher end, we have seen activity now shift between 25,500 and 25,700 in terms of calls. And that's where the indices may see a little bit of a zone of resistance of sorts on the higher end. Of course, on the lower end, we're starting to see a lot of strengthening of the 25,000 mark as one which will give you a little bit of support based on the kind of writing that we've seen in puts, not only in the 25,000 mark, but also 25,100 and 25,200 going in. Now, it was a good day of trade, which means that we also saw a lot of longs as far as stocks are concerned. So let's pull that up. So longs for Balrampur Chini, it was a good day of trade in general for the sugar space. Hindustan Copper, Bandhan Bank and Syngene International also looking at longs. Among stocks which are seeing unwinding, we had short covering for Deepak Nitrite, LTIM and Ramco Cement. But this is as far as stock-specific action is concerned, just on the back of what happened on Friday. Remember that we've also seen the SEBI formalize, the latest in terms of what we can expect with respect to adaptation of how new stocks can be included and excluded as far as where your futures and options space is concerned. And based on that, we also have a Nuvama note, which actually is telling us a little bit more about, the kind of stocks that you can in fact see an inclusion and exclusion. So if we can bring for you on your screen there, in terms of, the kind of the stock list. So let's start by taking a look at the exclusions first. The potential exclusions would, of course, be on your screen there. So those are a handful of names which are actually seeing not enough liquidity. So names like Abbott India, Metropolis, Granules to a certain extent, City Union Bank are some of those prominent names in that particular list. Nuvama has also identified 80 stocks that could be potential entrants, and this list makes for a little bit more of an interesting play. So you have names like Zomato, Paytm, something like a Nykaa, a Cyient, as well as something like an NBCC. All of them are looking at a potential entry point as far as the futures and options space goes. Now, this is your overall stance of things and in terms of stock futures and what you could potentially expect going forward. But let's take this conversation forward in terms of how you can play the current markets. And for that, we have Ajit Rambiar, Ajira Ventures, who's joining us on the show right now. Ajit, good morning. Thank you so much for joining in. Let's start with your view on the markets and how you're using options in this case.
Good morning, Arham. Thanks for having me on the show. We are currently witnessing an impressive rally in the market with the Nifty rising for 12 consecutive days. This remarkable momentum suggests that we might see the Nifty reaching the 26,500 level in the near short term. So there are minor resistances at 25,700 and 26,000 levels looking at the open interest, but the overall trajectory remains very bullish. So there are a couple of key factors. Firstly, there's been strong retail inflow into the markets, which has been a significant driver of this rally. Additionally, corporate quarterly results have been quite robust, further boosting investor confidence and fueling market gains.
Based on that, Ajit, I believe you have a slightly bullish tinge towards the bank Nifty. Can you take us through the option structure that you're deploying here?
Yeah, so looking at the slow and steady rise in indices, we can deploy in Bank Nifty, we can deploy very low risk bullish butterfly call strategy. So for this current weekly expiry, where we buy one ATM call of 51,400, which is priced at 272. We sell two calls of 51,600, which are priced at 177, and hedge it with buying one call of 51,800, which is priced at 110. So the total investment or the maximum loss of this strategy is mere 28 rupees for a possible gain of 200 rupees.
There you have it, and of course your most amount of gain that you can potentially make is at around 51,600 going in, right, considering that's where you sold two lots coming through. But Ajit, you're also tracking IEX. Can you tell us about why and what sort of an option structure you're deploying here?
So IEX has given a breakout. We are bullish on this counter. It has given a breakout around 200 levels. So we can initiate a bull call spread strategy where we buy one ATM. This is a very simple strategy where we buy one ATM call of 205, which is an ATM call at 8:30, and sell one OTM call, which is priced at around 235, the call of 230. So the net investment in the strategy is mere ₹5.95 to gain a potential of ₹20. So every time we try to keep very little money on the table, and if our view comes true, then we gain a lot. So the risk reward is very good in all these strategies.
Absolutely, Ajit. Well, on that note, thanking you for joining us and taking us through your views on the markets and also giving us a couple of strategies to work with this Monday morning. With that, it's back to you all.
For that, yes, those exclusions as well and inclusions may keep some of those stocks active in today's day of trade. Remember, the exclusion and inclusion could happen as early as December 2024. The PSP criteria, inclusion and exclusions, though, will not happen till the following year. But the big story, and if look at that, implied Nifty has actually turned positive. It was trading rather flat this morning. It was up about 2 points now, 17-point gain on the implied Nifty. So we should be setting ourselves up for a morning of consolidation with hopefully a positive bias. But the big talking point on the street this weekend and this morning will remain the approval of amalgamation of Gujarat Gas, Gujarat State Petronet, which has announced a new scheme of arrangement. This will help the government of Gujarat consolidate its assets in the energy business through various companies. Well, this will result in two entities post the transaction, and Mika standing by with more on this. Mika, good morning. You've done considerable amount of work on what this scheme of amalgamation is going to mean for companies. Markets potentially had a whiff of this because GSPL was up 25% in the last 5 days, while Gujarat Gas has been on the sell side since its earnings. Now, that could be attributed to it being a very expensive company, the fact that Morbi still is going to show a decline in PNG volumes in September. But all that aside, what do you have for us? What does this mean for both all companies included and then shareholders, of course?
Good morning. I'll start with what the scheme is. We can break it up into two. In the first part, 3 companies, Gujarat State Petroleum Corporation, Gujarat State Petronet and GSP Energy will merge into Gujarat Gas. Now, after this, the transmission business will be carved out separately and a new company named GSPL Transmission will be listed separately. So at the end, Gujarat Gas will carry out businesses of city gas distribution, gas trading, exploration and production, while the transmission business will be, working separately. In terms of swap ratios, well, for the Gujarat State Petroleum Corporation merger into Gujarat Gas, 10 shares of Gujarat Gas will be issued for every 305 shares held. For Gujarat State Petronet, 10 shares of Gujarat Gas will be issued for every 13 shares held in GSPL. For GSPL Energy, no issuance of shares since it's a wholly subsidiary. And when the GSPL transmission businesses, demerge, it will issue 1 share of the company for every 3 shares held in Gujarat Gas. Now, this will lead to a total issuance of 78.66 crore shares on behalf of Gujarat Gas. But most of these do get extinguished because all these companies have various stakeholdings in each other. And lastly, in terms of timeline, well, the company expects SEBI approval by December of 2024, and the entire scheme of arrangement will be completed by July to August of 2025.
Mika, what do brokerages make of this and what do valuations suggest? I mean, I just want to understand who is going to win and who is not, because from the look of it, GSPL shareholders, at least in terms of stock performance, are gaining for now.
Yes. When you talk about valuations, now the deal does seem very fairly valued. Now, in terms of Gujarat State Petronet, the entire company is valued around 26,000 crores, but the core business is valued around only 3,500 to 4,000 crores. And the company's investments are where the majority of the valuations come in, 24,000 to 25,000 crores. But for Gujarat State Petroleum, it's valued around 21,000 crores. The gas trading and E&P business is valued around 11,400 crores. And the implied EV to EBITDA multiple for the core business is around 7 times, which is in line with industry standards. When you talk about Jefferies, mixed views. Jefferies maintains an underperforming rating on Gujarat Gas. They do say that, the merger will improve Gujarat Gas's margin profile, but it also increases the earnings volatility. And post the merger, Gujarat Gas can have a fair value of 513 rupees, which is around 15% downside to the current market price. And lastly, we have MK. They've also have maintain a reduced rating on the stock at a 600 target. That's a flat upside or downside. The valuation, and they expect the merger to imply 50% EPS accretion for Gujarat Gas.
All right, thank you for that very, very detailed look at what's happening with Gujarat Gas, Mihika. And, it's a mixed view from brokerages, to be honest. Not everyone is so gung-ho on the Gujarat Gas sort of split up or reworking of their scheme of arrangement. But let's also hear what the management is saying.
The management business growth projections for GGL estimate it to become one of the India's largest integrated player with presence of gas trading and city gas distribution business. GGL will be able to better leverage the combined assets and expanded capital base all put together. It will enhance its profitability and return ratios on account of various gas sourcing portfolios which the GSPC is bringing along with it. The cash flow generated by the combined businesses can be deployed more efficiently in future to fund organic and inorganic opportunities which are going to rise in the expanding energy market. It shall become the only CGD company having access and also in-house expertise to various sourcing portfolio directly from domestic as well as international market. It also has regasification capacity tied up, resulting better business synergy. The combined entity will benefit from a stronger market presence, enable better pricing power, and the ability to capture a larger share of the growing demand for natural gas. I would summarize that the ultimate objective of the scheme of arrangement is to simplify the layered group structure. Second, merge various interlinked businesses into one entity. We are also looking towards eliminating related party transactions. The scheme of arrangement will also unlock value for our shareholders.
Okay, so Gujarat Gas definitely on the watch list. What else is on the watch list today on NDTV Profit? Well, we're looking at ONGC. That's all the positives on your screen. First up, 1 lakh crore of green energy investment. Lemon Tree has a new pact every day in a different place. This time it's Amritsar. So they have a hotel license pact. Lemon Tree might have a good morning. Fortis has bought 31.5% of Agilus Health. Then you have insecticide buyback of 50 crore at 1,000 per share. And of course, textile stocks to be watched for the India-UK FTA, which is on track.
Well, you've got Biocon. I think this one's a good one for them. The US FDA has given a nod for 2 drugs to cure skin infection. Bajaj Finance, these Bajaj Group companies have been on a tear last week, will continue to do well on back of its IPO for Bajaj Housing. AB Capital, they've had a 50% stake sale. Solar Energy has been given Navratan status. Railtel and NHPC also have a Navratan status.
Okay, Adani Energy will be buying Khavda Transmission, GSPL plus Gujarat Gas. We spoke about in detail. The merger is looking positive. Century Textiles has a 131-acre development pack. Adani Ent has an airport PLC in Kenya, and GE Power has an order for a Sikkim hydro project. Whole list today because of the weekend.
Lots and lots of stocks. Emami, they expect to acquire Helios Lifestyle, Adani Power to acquire Coastal Energy, GPT Infra on a big order win, HPL Power, name change, so no impact on stock, but could be a good one to watch. Indian Hume, a small 2,000 crore market cap company, but they've got an LOL for an irrigation project.
Okay, there's so many to go through. Tata Steel, merger with India Steel Wire, Federal Bank appoints KVS Money, and finally TVS, Auto Numbers, Aisha, also Auto Numbers, TCNS has a merger finally happening with ABFRL, was in the works for a while. Tata Steel is the other one which we just spoke about.
Yeah,
so
Maruti, I think just to add to the auto list, Maruti numbers were disappointing. The stock may give the street may give it a thumbs up. So keep this one too on your radar on the sell side. On the sell side, that list is in front of you. Tata Motors, August CV sales have dropped 15%. Street won't like that. Aisha as well has registered numbers that were slightly weaker for August. HDFC EMC, watch out for this one. LIC's cut its stake down to 2.9% from 4.9 on Friday, and HDFC Life has a GST demand of 199 crores. We also have DRL, where one of their significant drugs has been suspended, and MOIL, there has been a price cut for them.
Okay, let's go to our speakers this morning. Kush Bora, founder at kushbora.com, joining us. Soni Patnaik, AVP at JM Financial Services with us. Aditya Shah, founder at Hercules Advisors, also with us. Very good morning to all of you, and of course, exciting day. Kush, let me start with a bit of this newfound bullishness we've seen in markets, and the mood kind of changing towards the last couple of days of the week, last week. Do you see that momentum now continuing?
First up, a very good morning to all of you and to all the viewers. Well, let me also touch upon that point, that newfound bullishness a bit, right? I came across a very interesting study over the weekend, which is at the start of the year, the top 20 US investment banks, they put out a target on the S&P 500, which was on an average 4,900. The S&P 500 right now is at 5650. So if you would have gone by that estimate, you would have missed the 15% upside that's there on the index alone, let alone what the stocks have done. Why do I put this forth? Because, a lot of us have been having this discussion around, when the markets are going to correct, how deep is the correction going to be? My point is that if you've seen over the last 4 years, we've not seen any kind of meaningful correction. The only way to make money in this market is to either stay, invested, or at least, have some sort of position in it. You can't stay out, definitely you can't go short. So my point is, let the correction come. You're better off reacting to that rather than perhaps, anticipating it, biding your time, waiting it out. And hence, for the last couple of sessions, if you've seen about 8-10 odd sessions, even we've turned bullish where we've said, I think 26,000 is the next milestone to watch on the Nifty. So I think you should continue to play for that. Sector rotation, stock specific action will continue, but I think, this momentum is here to continue for a while.
Which is great as well, because timing the market on the downside has not worked out well. So are you, what is the call on the index from you, Kush, on the Nifty, or is it the bank Nifty? What is it today? What does somebody do today once the market starts? So both the indices are in a buy kind of a setup. The momentum for sure we know is with the Nifty. The bank Nifty has some headwinds around the 51,500 mark, which is the 50-day moving average resistance. Also, there is some call writing that we are seeing. So that is acting upon the bank Nifty, but I'm still fairly constructive. I think this resistance will be taken out fairly early, and 52,200 is what you're looking at on the bank Nifty. Nifty, I think the base has shifted. 25,000, the put base that you're seeing now will act as a support. So if you've got a position, you should continue to hold. Plus, I think, Samina alluded to this at the start of the show, which is for more than 30 years, this hasn't happened where we've clocked 12 consecutive sessions of gains. So just on the account of that, if there is some pullback, I don't think that's, any kind of a worry or a cause of concern. So if that dip does come about, you're better off going long on the Nifty. I think we're looking at 25,700, 26,000 as the positional targets. If you have a position, continue to ride it. If you don't, look to buy, maybe at slight dips, 50, 100 points, that'll be better off.
Kush, I know I keep coming back to Bank Nifty, and I would like to sort of agree with what you said, but let's also get another view with Soni on the same one. Soni, what about you? What is your trade on the index, and do you feel like September could be a month which will mark a comeback by Bank Nifty?
Good morning, everyone. Thank you for having me on the show. I think September and October historically have been known to be quite volatile months. If you look at individual indices, Nifty is holding above a very crucial base of 25,000. So as long as it continues to hold above that, it's all fair and well. It may test 25,400, 25,500. It will be difficult to say where it actually goes and stop. So I think it's important to watch for Nifty. Only if it closes below 25,000, we can say that, there can be some profit bookings that can start for the series. Talking about Bank Nifty, I think Bank Nifty is still underperforming. There's not a lot of confirmed data that is indicating Bank Nifty can take that lead. It is still in that range of 51,000 to 52,000 and very close to that support. So if it ever breaks and closes below 51,000, I would go for a contra sell in that index, because I feel that, there can be some positional selling, some positional pressure that can see in Bank Nifty towards 50,500, 50,400 instead. It still does not remain a buy on dips for me. It is very much in a consolidation range, and there's no individual banks that we can see that can take the lead for the index to perform or outperform Nifty or other indices. The sectors which are clearly performing are the NBFCs, financials. We can see pharma in good momentum. Auto also can catch up to the momentum. Heavyweights and bank are definitely lacking that momentum. So I think I'll just avoid and wait and watch for Bank Nifty.
All right, let me come to Aditya. Very good morning, Aditya. And I think on a day when you wonder as journalists in the newsroom that what's the big story today, we are spoiled for choice. There's just so much to discuss and so much happening. The Bajaj finance story is one which we have our eye on. Gujarat gas, obviously. What do you think are going to be the 2 or 3 big factors for the market this morning, and what are you watching out for?
Good morning, Tamanna. So now we are looking forward to the interest rate cut in the US.
Okay.
I believe that there could be one interest rate cut that could come up by the end of this year. And the Bajaj Housing Finance IPO is going to be really very good. Mind you, we've seen 3 years of absolutely zero return from Bajaj Finance. Although the business is doing absolutely fine, there has been some bit of valuation correction that has taken place on all of the large cap financials per se. So my bet would be over a period of next 3 to 5 years, large cap financials would be a good place to be in. And particularly companies like Bajaj were now growing at about 20-25%, and a whole lot of value unlocking will take place when the Bajaj Housing Finance IPO is. So look at large cap financials. That's a good place to be in. Valuations have corrected, not really very expensive. Good time to bet on these companies.
Right. Soni, what are your top stock recommendations? You had quite the pick last week on Birla Soft, I remember. But anything else that looks really hot this Monday morning?
Definitely. Samina, the first would be from the pharma space, Metropolis. So I think Metropolis has come out giving, it's approaching a consolidation range breakout on charts that we can see. So one can buy in September futures around 2150 odd levels. It's in futures level, keeping a stop loss of 2125 and a target of 2200 for the series. The second buy pick would be from the chemical fertilizer space, PI Industries, which also has been consolidating in a range of 4450 to 4528 max. So I think there's a preemption that, it will break above the 4520, 4530 resistance. Above that, it will give you that breakout where it can lead towards a fresh high of 4600, 4640. So one can accumulate to buy in the range of 4500 to 4520, keeping a stop loss of 4450 and a target of 4600, 4640.
All right, Kush, let's hear your top picks for the day. And if I have to extend, maybe what you're watching for the week as well?
Sure. A couple of updates before that. Some stocks that we discussed last week. So on Monday, we discussed Shriram Pistons. That stock is up 2200 was the first target. Not there yet, but that's, I think, that's a good update to have. The target's not hit, so there's still room on the upside. Then there was ICICI.
So it hits 2200, you take money off the table?
No, I think you play for the 2300, the second target. Okay. So, continuation. In fact, Shriram Pistons is a stock that you want to continue to hold also for, a few months. I wouldn't really book out too early, but then if you're a trader, then 2300 is the level to watch for. Then ICICI Lombard, we discussed this, I think, on Tuesday, and that stocks hit the first target. Corrected a little in terms of the profit booking, but I think the overall trajectory remains 2175, 2225 are the next levels to watch for. And Friday we discussed Vedant Fashions, Manyavar, and this stock too has hit the first target of 1255. Now if you've got this position, continue to hold for the second target of 1275. You might want to trail your stop losses on this one. For the day, maybe even for the week, two sectors that I think we've discussed in the morning, pharma and chemicals. They are no longer defensive bets because and I like to probably broaden the horizon a little. The entire healthcare space for the last maybe 2 quarters has seen some stellar moves, and every now and then a new name also keeps cropping up. Similarly for the chemical space. So the 2 stocks that I have today, one is Mankind Pharma. Again, the stock has had a very good run, but despite the kind of vertical rise that we've seen in the last month or so, it's still far from those overheated territories. So I think from a pure play momentum perspective, also if someone wants to get in, it's still a good chance. 2550, 2625 are the levels to watch for on the upside. 2440 is your stop loss. On the chemical space, Mangalam Organics, rarely discussed stock, but it's had a very good run over the last 3 to 4 months. Continues to make higher highs. Friday also it closed on a positive note on the back of good volumes. So from a near-term perspective, you're looking at a 555 and a 570 as the targets, and 530 is your stop loss.
Okay, so a lot to unpack, including the M&M numbers which have hit your screen. On the face of it, the M&M sales numbers for the month of August are looking good, but we'll break that down along with the entire auto pack after this very short break. Pre-open also up next. Stay tuned.
Back with India Market Open, 30 seconds left for the pre-open session to come in, and some numbers on your screen as well. The Mahindra & Mahindra sales numbers. The car numbers seem to be very, very strong. What doesn't seem to be too good is the tractor number, wherein the expectation was of a 5.8% uptick and the tractor sales have gone up by 1%. But the car numbers, guys, YOY expectation of 2%, month-on-month growth expectation of 8%, and they've clocked in a double-digit number out there on the PV side. So that number has looked solid at a point of time when Tata Motors as well as Maruti have shown a 3% downtick. Granted, the bases are different, but good numbers.
So base is different is one, but even so, remember when they had very aggressive pricing for a few models, and that was initially seen as a negative by the street, perhaps, and in response to your hybrid subsidies, etc., which the state of Uttar Pradesh was giving. Actually, it may be, if you look at the minutiae, may have helped M&M drive, and they're positioning it well. They're figuring out what the market really wants. So in PV, that's an interesting kind of take.
Yeah, they seem to be doing well. Not too many discounts are there on M&M cars, as somebody was telling me.
One or two models. They're picking and choosing which ones.
But very light otherwise. Yeah. So, look solid. Aditya, by the way, the pre-open rates are on, so we'll of course revisit them. But for now, it seems like M&M could start off well. Aditya, good morning. What do you do with the four-wheeler space and M&M versus, let's say, a Maruti or a Tata Motors? One, are you buying into four-wheeler stocks currently? And if so, which is the favorite?
Good morning, Niraj. Mahindra and Mahindra's uptake in sales could also be that they've released the Thar, the 5-door Thar, and those numbers could have been into the picture this month. So that's why the sales uptake could be there. Mahindra is a fabulous company, and within their PV segment, they are going to invest heavily over the next 2 to 3 years, not only in the EV space, but in the IC engine space as well. And within the tractor space also, they are market leaders. So one of these stocks that is our topic continues to be Mahindra and Mahindra. We are negative Tata Motors because the stock is really very expensive now, and the stock needs to consolidate here for a while before it starts its next leg of up move. Rather than this, two-wheeler space looks really very interesting to me. Somebody like a TVS Motors reported a 13% growth in their numbers, and that really looks good. We'll wait for Royal Enfield and Aisha's numbers. They also, I suppose, will report decent set of numbers. So my preference would be towards a two-wheeler side of it. And the top picks would be TVS and iShares, of course.
You're right. TVS is going to get a good start this morning. And of course, with M&M, it'd be interesting to see if they're seeing a rural recovery or is it urban that continues to lead for them. The other thing, remember that the company was working hard was to bring down the inventory days. And inventory days are now just about 4 to 5 days above average from what I understand. So largely, they're setting the house and fixing the house just before they go into festive season. Markets, on the look of it, at least in pre-open trade, may like what M&M has done, and the stock could be seeing a gap up in trade. The same applies to the TVSs of the world, which also should be getting a gap up start this morning. One thing that I want to quickly allude to before we continue our conversation with our guest is the IPOs and the listings that we have lined up this week. Remember, you've got a very, very busy week ahead with a whole bunch of companies that would be hitting the street. You've also got listings that are happening. So you've got Premier Energies, which will debut on the exchanges on the 3rd of September. So watch out for this one. The grey market premium on this one is indicating to a 45% gap up on listing day. You've also got ECOS, which is a chauffeur-driven company, was well subscribed when it closed for subscription. ECOS will be listing on the 4th of September. This one too was expected to see a 35 to 40% gap up on listing day. Bazaar style retail is not looking as or hasn't got the response that the ECOS and the Premier Energies have got. The public issue of Bazaar style was only subscribed 0.7 times on day one. Aditya, I don't know whether you track some of these listings or IPOs, but it'd be tough not to or tough to ignore them because that's largely been the biggest talking point. And this week too, you've got NFOs, you've got listings, you've got the likes of a Northern Arc as well that are hitting the markets to raise money. Do you track any of them? Premier, ECOS, Bazaar style, anything on your radar?
Green energy continues to be a very, very strong space, and within that, Premier Energies continues to be in a place. Yeah, so it continues to be in a very good space. However, I don't expect the valuation at which it will get listed to be cheap, and then it again goes into that expensive valuation space where it remains unreachable for many new investors per se. So I would tend to say that IPOs where they are getting massive oversubscriptions, the GMPs will lead the listings to be really very high, and then those stocks continue to become avoided. So be really very careful. Don't buy at any valuations because once the market corrects, the excess froth will also come down. So be really very careful. But green energy space is something that seems to be really very good.
Look at a few of those recent listings. Sony, I think the big trades this morning would be GSPL, Gujarat Gas. And I'm going to highlight this because GSPL has also had a good run last week. In pre-open, it's looking subdued. And Gujarat Gas, and I'm also going to throw in NBCC because it was again it was rather all over the place last week on back of the bonus issue. On these three stocks, what are the charts indicating?
Talk about Gujarat Gas, it is opening around 630 odd plus levels, what we can see as per the pre-open. Now, assuming that it continues to remain above the 620 level, which would indicate that the option chain breakout has also come in, there's a possibility for the stock to test some higher levels around 650, 660 odd levels for the day. So I think that's the level to watch out for. If we talk about NBCC, I think the important level to watch out for would still be 193, 195. If it's able to cross that, there'll be a good long range breakout in the stock, which can lead towards 205, 210 levels. Very important to watch. However, from the lower end of the stock, 163 is a strong support. So I think the risk reward ratio may not be favorable. So it's wise for NBCC to just wait and watch and let the resistance be crossed, be breached. Then only one can enter for a long trade, keeping a stop loss of 185 back then, and then a target of 210 can be seen.
Okay, let's talk about our top brokerage call this morning. Harsh is joining us for more on that. Harsh, what's on your radar?
Well, Systematics, they've initiated coverage on Gulf Oil with nearly a 20% upside. Now, this is interesting because as such, they seem to be pivoting in terms of their business. ICE is of course getting phased out slowly and gradually, and they're moving more towards the new age businesses to rely and lean on where growth is concerned. One is EV, the second is data centers. Cooling in terms of data centers and lubricants for keeping data centers, in terms of temperature control for data centers is going to drive growth going forward. And what it also seems to suggest, the note itself, is that they will likely grow in terms of volumes double that of industry. So they are expecting a much stronger volume growth for Gulf Oil going forward. Largely, when ICE was the fad at that time, of course, Gulf Oil was a strong business to look at, but as EV started to come in, there was some tempering in terms of expectations, terminal value, etc. That seems to be getting phased out also, because what Systematic seems to believe is ICE is here to coexist with EV, and therefore ICE is not going away in a jiffy either. ICE, of course, being the traditional internal combustion engine in terms of vehicles, and therefore that will likely continue to drive growth as well. So several levers of growth. Margins expected to remain around 14% odd. They're valuing this at 18 times FY27 price to earnings and giving it a target price of 1700 on the back of that.
That, Harsh, there's a bunch of stocks that have got upgrades coming in. Gulf Oil is topping that list. Kush, we've not talked to you about auto stocks. You want to give us a view? If there's an auto stock you have to buy this morning for intraday, let's make it exciting. Which one would it be?
Mahindra & Mahindra, let me take that bet.
There's a good chance it's opening 2% higher. You're still sticking your head out on this one?
And hence a bet. No, I'll tell you why. Because I think a couple of weeks ago when we had spoken about this space, the view was very clear, and it still remains to a degree, which is Tata Motors is a medium-term buy. Mahindra & Mahindra also you buy for a positional play, and Maruti is something that you want to short or play the range. 12,000 to 13,000 is the broad range. Now Mahindra & Mahindra, after 15-20 sessions of consolidating, is giving you, consolidation is giving you a breakout. I think this is perhaps going to help the stock hit that 2950 and higher levels. So from a momentum perspective, I think this is a good trigger. Tata Motors, as I said, is a more medium-term play. After the kind of burst that we saw, on Friday, the stock actually sort of cooled off. So I'll perhaps take it easy on Tata Motors, just perhaps hold it from a medium-term perspective.
And,
but Mahindra & Mahindra.
What about Maruti?
Maruti, as I said, is more of a range play. It's respected that 12,000 to 13,000 range, 100, 200 points here or there. So every time it comes closer to 12,000 is when you enter, 13,000, 13,200 is where you book some profits and take some money off. When it breaks either of these ranges is where you'll see a more clear direction emerge. But up until then, 12 to 13,000, the range remains.
So I just want to take a look at some of the movers in the broader markets as well. And all your Navratna status, players are also doing fairly decently. NHPC, SJVN, RailTel. Let's just pull up those three and get Soni Patnaik in on them. Soni, are you seeing a breakout after a bit of a sluggish period for these three?
So if you look at NHPC, definitely I think the way it is opening today above the 50-20 EA-made hurdle, I think it can continue to sustain above those resistance. There's a possibility of the stock testing 108, 110 levels, maybe in a day or two. And if we talk about RailTel, it's almost similar formation. The stock also is given a good, gap up opening today. Obviously, assuming that it continues to sustain above the 500 odd levels, the stock can test, maybe around 545, 550. So I think both these stocks can be held with not a lot of, maybe just a 1.5% of a risk from the opening levels. I think that's the stop loss one can place and play out for a day or two.
What about Interglobe Aviation? Soni, are you tracking this one? There's been an ATF price cut. I'm assuming sentimentally, Interglobe should look okay in trade, 1.5% higher. So no runaway rally, but on Interglobe, do you have a trade? And while you're at it, give us a view on OMCs as well, actually.
I think if we talk about Indigo, then perhaps a buy on dips would be a better strategy than not to jump at current levels wherever it may open, regardless of that. I think just wait for the levels of around 48, 40, 40, 20. That range, if it is seen in Indigo, that can be a good level to buy. Keep a stop loss of 47.80. The stock can again retest 4900, 4930. Positionally, it may see a resistance only around 5,000 odd levels. So I think this range of 200 points is a beautiful play. One can buy at a lower end of the range and book the profits on the higher end of the range. I think that's the play to watch out for.
All right. Some more auto sales updates coming in. Escorts Kubota is the other one. So tractor sales up about 0.4% this month at 5,614 units, but a tad below estimates as well. Now, Aditya, I just want to come to you on within the, and you've spoken a bit about, of course, the whole auto number play, but within that larger basket, would you be most bullish on two-wheelers, on the rural consumption improvement story, so that bucket of commercial vehicles, etc., or the passenger vehicles?
So I will be bullish on the two-wheeler side of it. On the two-wheeler side of it, we've seen TVS Motors coming out with their Jupiter two-wheeler, and that seems to be doing pretty well. Royal Enfield also continues to do pretty well. So the order would be two-wheelers. Then you will go to the rural place where somebody like Escorts or somebody like the Mahindra and Mahindra tractor sales is there. And then ultimately I will move on to the four-wheelers.
Which IT stock still looks good to you to buy this week? Wipro is one that hasn't participated, so I'm just guessing a catch-up possible there?
It rarely does that, and definitely not in the momentum kind of a way. So, more of an HCL Tech or a Persistent is what, I have on my radar, plus an Emphasis. So these are some of the stocks, HCL Tech, and, then there's Emphasis. These stocks have got momentum by their side, and, you'd want to continue, being in those, or maybe continue to, track those for creating any kind of fresh positions in the IT space.
Yeah, another sharp mover this morning seems to be Biocon, on the back of two approvals they have got from the US FDA. That's talk about 2.5% pre-open. Not one that moves that rapidly. Sonia, are you seeing anything exciting happening here?
Biocon, it's a good range. So I think if it's holding above the 360 for day after the gap up that we can see, there's a possibility for the stock to test higher levels of 375, 380. That can be an intraday base. So I think any move above 380 will give you a very fresh breakout in the stock. It can head towards 400. So I think it's a good buy from current levels. If it's holding above 360, I think that itself should do the trick to keep a stop loss of around 360 and hold for higher targets 380 and 400.
Right, those are a handful of stocks you have as you gear up for trade this morning. Remember, it's going to be a positive bias sort of trade. It'll be a morning of consolidation because we've had a very good last week. And, it's a stable market. And what we've seen that you've had no wild swings on either side post the August 5th event. So stable consolidation, 25,000 is important. Bank Nifty needs to participate this month to help the Nifty at higher levels. The market very clearly remains a buy on dips. Lots of specific blocks. So you'll have the Gujarat state stock to watch out for. You'll have a whole bunch of Navratan counters, auto stocks, IT, pharma. I mean, there is so much to pick from in terms of trade. And we seem to be outdoing what the implied Nifty was indicating too. We are also outperforming the rest of our global market peers. Asia is trading lower, but we are trading higher, 0.3% higher on the Nifty when the expectation was not actually expected to be very strong. Bank Nifty still underperforming the benchmark, but a catch-up here is what most traders will be eyeing. Broader markets have been doing okay, but there has been some leadership that's been coming from the large cap index. This morning, the mid, small and the micro cap index performing bang in line with the benchmark. A quick check of how the Nifty 50 is doing. The breadth of the market, I would imagine, is positive with a very clear bias to the gainers, largely because you've got so many blocks, like I said, of interest in the markets this morning. If I can get the Nifty 50, it should be useful so we can give some more perspective on what's moving, and that's the breadth. Fantastic to say the least. You've only got 5 stocks that are trading lower. 45 counters in the Nifty 50 are trading in positive territory, leading with Hero MotoCorp. So the auto stocks are on the radar. This one came out of really nowhere, but this morning 2.5% on Hero MotoCorp is what you have. Pharma continues its upward journey, so no pauses there. HDFC Life, I don't know why it's trading higher because you've had some movement in terms of block deals there, but the stock's higher. Ultratech has a positive upgrade coming in from them. OMCs are doing all right in trade. On the sell side, Tata Motors on back of auto sale numbers is weaker. M&M is trading flat. HDFC, Maruti, those are reacting to weak auto sale numbers. M&M slightly confused, not sure whether the market should be rewarding it on the upside or downside. For now, M&M is trading flat as a pancake. But Tamanna, it's a good looking market, and I think I'm pleasantly surprised because we weren't expected to get a gap up. It's a good gap up. Now, holding on to that should be interesting. But the breadth is solid, and I think we'll take heart from that.
I mean, you're sitting fairly easily around the 25,300 mark, which I think is quite commendable after the kind of seesaw week we've had. Now, are you going to, how far, how many months or weeks to 26,000 is going to be the big question. But let's look at what's happening in the broader markets for a second and pull up the mid-cap and small-cap indices before we move forward. And yeah, I mean, positive but flat, not too much of a movement there. Small caps also barely, less than 0.5% up. It's a stock-specific kind of day. So let's look at what's happening there. The big story this morning about Gujarat Gas and GSPL, that merger. 3 companies, out of which some are unlisted, become 2 companies. Obviously good for Gujarat Gas. That's about 9% up. Not great for GSPL. That's about 4.5% up. More to do with the kind of shareholder swap than anything else. But yeah, Gujarat Gas, in that sense, the stock of the morning that we've been talking about. Navratna status accorded to a few PSUs. How are they reacting? NHPC up 3%, RailTel and SJVN also all in positive territory around that 3% range this morning. Biocon, we've been talking about pharma making a bit of a comeback, but slow and steady. So Biocon also positive, but barely so, about 1% up. Not showing the excitement they showed in the pre-open session at all. NBCC, bonus issue was what was on radar. Tepid, about 0.5% up after that 1:2 bonus. But a more comprehensive look at all of the auto stocks, including those that are not in the Nifty. So TVS mildly in the green, Eicher in the red, but not too much. Their numbers less than exciting perhaps, but Hero Motor doing well, about 2% up. Maruti was degrowth in completely flat because there was a degrowth in sales, but that was on expected lines. M&M, although the numbers look very, very good, but remember the tractor numbers are under what was expected. So maybe that's what's weighing on M&M this morning. So it's an auto story, Samina. It's maybe a bit of Navratna stories, and it's all about Gujarat Gas.
Who would have?
Market breadth, I would say.
So it's a good-looking market. The breadth is good. The broader markets are trading positive. The markets have opened better than our global peers and better than what the implied Nifty was indicating to. This is very interesting what's happening to Gujarat Gas. Remember, there is a margin accretive for Gujarat Gas on this deal, but the stock was an expensive stock. And the fact remains that brokerages have actually not gone out and aggressively upgraded the counter either. But maybe because it sold off so substantially in the last 1 month, the stock is recovering really well. A 10% up move on Gujarat Gas post the announcement of the merger. Well, GSPL on the other hand, which is supposed to benefit, has already ran up 20%. So what you're seeing this morning is profit taking. On GSPL, and Gujarat Gas on the other hand is holding steady. SJV and Tamanna indicated the Navratan status is good news for them. The counters are trading with a very clear positive bias. Kalyan Jewellers is also up 2.5%. GSW Energy, Fortis Healthcare, Max are some of the other big gainers on the Nifty 500. On the sell side, I have a few more that are looking slightly lower. Dixon Tech, PB Fintech, after a good run last week, sees some profits being taken off the table. Mid-cap IT, so KPIT Tech is down about 2%. Prestige is trading lower. Remember, they've got a big QIP that will hit the market soon. Oil India, BSC, Vodafone are trading subdued in the session. Well, so that's what we have. It's a good-looking market for whatever it's worth. Sectorally, real estate is taking a knock this morning, but most other sectors are trading deeply in positive territory. The WIX has also sprung up just a little bit as we see it.
Just one thing though, there is a 5% arbitrage on
GSPL.
Friday's closing price of Gujarat Gas. This move, fine, Gujarat Gas the market likes. Why is it that GSPL is punished with the 5% arbitrage is the key question. So either of them have to reverse. Either we need to see GSPL price recover or Gujarat Gas come off a bit, because the ratio is firmly in favor of GSPL.
But GSPL will not sell off. It will play catch up. There could be some profits getting off the table because of this 20. And there you go. GSPL is moved
in
from,
the green.
yeah,
Exactly.
So it's only a matter of time. I think the day will play out. And Gujarat Gas, I'm not sure why it's at upper circuit. It's still the big question mark.
Value unlocking. So maybe this whole holding company structure getting completely discounted.
So cost is going to come down because intercompany cost is what is high for them. Margins will improve, but it is still an expensive stock. Their earnings were still disappointing. They've in fact gone out and given a guidance that volumes are going to drop 6 to 7% going into the next quarter.
Yeah.
But who's to say? The street likes it.
The whole
Brokerages.
valuation question is in a different trajectory in any case. But I don't know. I don't know if GSPL is going to make that upside that you're saying, Niraj.
Because there's a 5% arbitrage. So if Gujarat Gas has to stay up higher, if the street believes in its wisdom that Gujarat Gas should deserve this 10% uptick or an 8% uptick, GSPL ideally, logically, by virtue of that arbitrage, should move higher.
All right, Bajaj Auto sales numbers also out as we speak. Let's just quickly look at what's happening to the stock. Total sales at 16% at 3.97 lakh units. It's doing okay. Bajaj Auto has had a good run. Two-wheeler sales up 18%. Remember, they're getting aggressively into the EV game as well. And that's boded well for Bajaj Auto. All right, quick take from Kush and Sony on how they're seeing the markets pan out after the first few minutes of the opening session. Kush, anything interesting you're spotting, and any take on the indices? I mean, the Nifty holding on fairly strong in the opening session.
It is, and there is a certain addition of OI that we're seeing on the 25-200 put. So is the base shifting higher by another 200 points? I mean, looks like that. And the Bank Nifty also testing that 50-day moving average resistance. So if it breaks, then there could be some upside still left for the day. Now on the stock specific front, I think 5-star business, this is starting to look very interesting. It's had a good reversal. The last leg from the technical standpoint was the 50-day moving average, which it hadn't crossed up until Friday. Today it's opened above that, sustaining above that. So I think this is one thing, one stock that can move significantly higher from here. From a trading perspective, you're looking at a 785, 800 plus kind of move on this one. 750 is a good support zone, so you can keep your stop loss there. So 5-star business has turned the corner on the 50-day moving average as well and looking up.
Right, 5-star is the one that you're picking. That's a Kush trade coming in. Sony, anything you have for our viewers intraday after what markets have done this morning? It's actually a good start, contrary to our expectations.
Certainly. Samina, one would be in Sun TV, which would be a conditional buy. I think there's somewhere around 827, 830 is a bit of a hurdle for intraday. Now, if it's able to cross at 830 level, the stock can test 855, 860 for the day. I think that's the level one can watch out for, and a support of 818 from those levels can be kept as a stop loss. So that's one stock. The other stock would be in Cummins India that we can see. The stock is just crossing the 20 EMA hurdle. So there's a possibility the stock can test at 38.20, 38.30 for the day, and a stop loss of 37.40 from current levels can be seen. So I think these two stocks may be seen.
Some stocks, by the way, Indian Hume Pipes on that irrigation order from Maharashtra is up 10% with total traded quantities on the BSE at nearly 50,000 versus an average quantity of 16,000 shares for an entire day. So 2-week average quantity. So very high volumes there. And a couple of other stocks. One of them, which Kush Boda had pointed out earlier 2-3 weeks ago. Watch out for small upticks already on both JM Financial and Allied Blenders. Now, both of these have had a good heady run last week and are starting off well today. Kush, I remember you had spoken about JM Financial. Is there more upside here? The other one is Allied Blenders. Splendid move last week, picked it buying from the open market and 2% up again today.
So let's start with JM Financial. I mean, this is one stock that isn't usually discussed, but for the last 5 odd sessions at least, we've seen good momentum return. I think this momentum can continue. There is a very strong volume action on this one. So I wouldn't be surprised to see 115, 120 kind of move in the near term on JM Financial. Allied Blenders 2 has picked up quite a bit. Limited data on this one. So that's, perhaps if I look at it from a smaller time frame, then the momentum indicators do suggest an upside on this one as well. But again, very limited data for the moment.
Just quickly on Allied Blenders, I think, or blenders and distillers, is that there was, I think Nuvama was it, that had gone and met the management and were very constructive. And a few weeks ago, while they are the big daddies in the India market, they are looking at bringing down the Russian standard and Bangkok-based Thai beverage. You were in Thailand. You should tell us whether there is an audience for that. But that is probably what's working for them, because after a positive debut...
No idea about this one.
No, you didn't have any Thai beverage.
I don't think this is the beverage which Niraj was having.
No, this is the alcoholic
I was having
beverage.
coconut water.
Oh, is that right? Is that right? Teetotaler. But maybe that's what's playing out, because after a positive debut, IPO on the exchanges, it had gone quiet. Yes. And now with the Newama's, of course, conversations with them, the fact that they're expanding their global portfolio or they're offering with a global brand could probably help the distribution.
One more very small thing, sorry, before we move on, but on Allied Blenders, with the IPO proceeds, they brought down the debt.
In a big way.
So therefore, the interest savings will start getting factored in or showing next quarter or this quarter itself. And therefore, you might well see the numbers improve on the bottom line as a result of interest cost.
Yeah, and I think they are going ham in terms of, product launches as well. So much happening for the company. And of course, Mr. Chabria has been in the business for decades together. But that's the word coming in on Allied Blenders. But anything else that we're identifying this morning?
I just wanted to get a view from Soni if she's there on Bajaj Auto, since we have those sales numbers coming in. And I know we've been talking a fair amount about auto stocks, Soni, but just, as the numbers are coming in, how are you liking Bajaj Auto? Already fair amount of run-up, and we've seen auto stocks in the first few minutes of trade pair off after their initial reactions, but Bajaj Auto now going strong.
I think Tamanna, of course, I think rightly pointed out, the stock has seen a very strong uptrend. It's just continuing in that. If we ask about the current levels to enter at current levels, and the risk reward ratio may not be favorable, there's a good support of 10,500. So maybe anywhere closer to the support, if the dip is seen, then only I think it's wise to just reinitiate the longs around those levels. The stock has the potential on a medium-term play. It can test 11,800, 12,000, but it'll be a medium play. I think that's the levels to watch out for, and try to add on dips only. I think that would be the advice to all the investors from current level.
Well, that's the call coming on Bajaj Auto. Interesting play. While M&M numbers were actually good, the stock is trading lower. Maybe it's an opportunity to go into the counter if one's looking to trade it. Kush, this was your pick this morning. You still hold it and keep with it?
Absolutely.
It's an opportunity to actually go and buy.
Sure, for sure, yeah. And just that, the momentum play might be done because the news is out, but, nothing changes for me. If you've got a slightly medium-term horizon, then definitely, this is a good consolidation play, in the offing. If you want to hold on for some time, then for sure, this is a good time to enter.
Good time to buy M&M. That's the word coming in. Soni, you want to quickly come in on M&M? Would you buy it at the current market price? It's open lower, contrary to what pre-open was indicating too.
I think M&M, I would hold it as a conditional buy. It was not able to sustain the higher gap up. So only if it on intraday basis able to cross above 2825, which will indicate that the option chain breakout has come, then only one can enter in longs for those levels. It can head towards 2900. If it's not able to cross those levels, then there's a possibility the stock can test towards 2740, 2720 range, and that dip also can act as a buy on a dip range. But either way, either side of the range has to be tested for a positional play to work out.
All right, thank you so much, Soni. Thank you, Kush, for joining us today. It's been an exciting morning, and I think one of the most exciting stories this morning is what's happening in Gujarat Gas, and we have just the right person to talk to us about it. Prabal Sen, Senior Research Analyst, Indian Oil and Gas Sector, Institutional Equities, ICICI Securities with us now. Prabal, very good morning to you, and this is, excellent time to talk to you once the market has sort of responded and ingested what's been happening with Gujarat Gas. Let's start with the big question we've been discussing in the studio. Why the love for Gujarat Gas and a bit of concern about GSPL from the market this morning?
Honestly, hi, am I audible?
Yes, absolutely, Prabal.
All right, sorry. So I think the concern around GSPL is not so much really a fundamental concern. It's more, I think, that the stock markets had already had an inkling in some way of what was going to happen to the story. And, and therefore probably there was a bit of profit booking of people who had built up positions earlier. If you look at the price on Friday, the stock was already close to 5% of the swap arrangement, derived fair price. So thankfully the stock is again now coming back to the 465 odd levels, which is, implied by the merger ratio. So to that extent, I would say that GSPL is more of a, short-term tactical moves that were basically being done because of the fact that the stock had reacted early. Gujarat Gas very clearly, is something that is likely to benefit from this move, which is what the stock has basically reflected. A bit more than what we estimated, but that's okay. I think we still remain fairly positive on the name as of now.
Yeah, absolutely. Just one more point, Prabal. I mean, you've explained, and you've very good note out where you've explained in detail what will help. But just for the benefit of our viewers, apart from a strategic outlook to this merger, in terms of earnings, what is the implication for Gujarat Gas?
So what is happening is, if you look at the gas trading portfolio of GSPC, about 45% of the gas used to be transported or sold to Gujarat Gas itself, on which they would make somewhere around 2.5, 3 rupees. They've not disclosed exactly the margin mix between what they were selling to Gujarat Gas versus what they were selling to someone else. But broadly speaking, of the 11-12 MMSCMD of the trading portfolio, they sustainably can make about 1,000 crores of EBITDA. So if you add that number to Gujarat Gas, plus there is about 2,300 crores of cash that GSPC had, which you can basically say anywhere between 180 to 200 crore is probably the other income potential that gets added on. And of course, there would be some depreciation costs that get added and so on. Net of everything else, your PBT can actually average around 3,500 odd crores, as is, we've given a calculation in the note as well. Now, most importantly, you've got a 72 billion rupee tax loss that you can actually utilize over the next 3 years, which effectively means whatever you earn on the PBT line flows through to the net earnings line. So put together, that is basically what is adding the 15 odd rupees delta in terms of EPS on our current base case estimates for standalone earnings. So the number goes from somewhere around 21, 22 rupees, which we have as published estimates today, to an estimated 37, 38 rupees, basically once the deal is consummated and everything is regularized. So that is really the big jump that we see in terms of earnings. Most importantly, if you look at the savings that they could make in terms of the margins that they no longer have to pay GSPC, there is a sustainable improvement in gas costs, therefore, going forward, which they can either partially retain, they can fully retain, whichever way you look at it. It can result in better volume growth or stronger margins, or a combination of both as and when we go along. And I think that is something that will be more structural in nature over the next 3 to 4 years.
Quickly play devil's advocate, and I know you like Gujarat Gas, and the street is also enjoying this. As we see it this morning, it's up 13%. But the fact is, this is a very expensive stock, or has been. The earnings were a disappointment. They downgraded the outlook in terms of volume growth. The dependence on Morbi also makes it extremely earnings sensitive to what comes out of there in terms of PNG volumes, which were expected to decline in September. Do you feel this is just a sentimental impact, and operationally the gain on margins because of cost optimization as intercompany costs will come off will offset the operational concerns that we have with Gujarat Gas, or had until 2 days ago?
Okay, so as far as the September quarter is concerned, you're absolutely right that the earnings will be basically weak. And to be fair, we've had a sell rating on the company for a while now, primarily because of the concerns that you raised, that the volumes from Morbi still have an outsized proportion in the overall business of the company, and those are inherently volatile because they are competing against propane prices, which have also been up and down, and therefore that makes earnings predictability very, very difficult. Those points notwithstanding, the one key change, which is why I mentioned that the one key change that's happening in terms of the control over your sourcing and control over your sourcing costs, that straight away adds a lot more leeway in terms of your pricing power, in the sense that propane volatility can actually be more effectively addressed because you've got much more room to play with as far as your sales prices are concerned, because you've got more control and moderation in gas costs than was possible even before this deal. That is number one. If you really do the math, there was about 5 MMSCMD that Gujarat Gas purchases from GSPC, on which if you take out the 2.5 to 3 rupees that was being made as margins, that straight away adds an effective 2 rupees to your gas cost that you can play with, which takes care, in some ways of around $20 to $30 a ton of variation as far as propane prices is concerned. So that is, I think, a significant change that happens. The second thing is that it effectively provides a hedge. Trading business has been surprisingly stable and on an increasing trend, both for GAIL, and if you look at the margin trends for GSPC as well, the kind of pricing that we expect for LNG and spot LNG prices going forward suggests that trading business will continue to do well, and that anyways therefore effectively acts as a hedge in terms of overall EBITDA potential for the next 2 to 3 years. And as I said, the tax benefit that is there, it's a real tangible cash benefit that you're getting because you're avoiding having to pay tax. As per the merger rules, you're allowed to basically offset this for the next 7 to 8 years. And I think that's a very, very powerful tool as far as earnings strength is concerned over the next 3 to 4 years.
Just one question, Prabal, and of course the merger, etc., streamlines the whole situation for Gujarat Gas, seen as a positive. But moving forward after the merger news, do you see regulatory issues as perhaps one challenge for the space, and of course Gujarat Gas, especially what happens or what keeps happening with city gas distribution businesses? Is that a possible sort of cloud on the horizon?
I think the regulatory challenges are going to be faced by the transmission entity, there is no doubt. Even with the carve-out that should happen, the concerns that are there around GSPL will continue to be real and valid. So, while the management is very confident that they will get additional capex authorizations and they could get a favorable review of the tariff that was basically cut by close to 45% in the last review order, the fact is that the new entity, as and when it emerges, will be facing the same challenges, that the tariff is obviously much lower than what they were earning before the last tariff order came through. As far as the CGD business is concerned, I believe the major risk is that if priority gas allocation actually continues to decline at the rate at which it is declining, I think that presents a real and present danger as far as margins is concerned. Because if you have to keep replacing $6.5, $7 an MMBTU gas with even $9, $10 MMBTU, that is something you have to either pass through if you have to keep your volume growth going, or you have to take a hit on your margins. Both can't happen at the same time. So I think that is the main risk. I don't see any huge regulatory risk in terms of competition coming in or open access and so on, because frankly, the availability of gas itself is so restricted, specifically for the priority segment, that the potential of a third party coming in and grabbing business from an incumbent player and getting gas on the same terms, I think is very, very difficult. And at least it's very improbable. Let me put it this way, at this point of time.
Prabal, we're obviously short of time, but I quickly want to get a view from you on what's happening to marketing margins. Crude has been up and down, $80, $76, settling now lower because there is a downside bias. Will this have a structural impact on the earnings of OMCs and also ONGC? Now, this one reported earnings that missed street expectations. Stock actually went up. And it's had a very sort of volatile move. There have been a few upgrades as well, which I'm mindful of in the last few weeks. But I also know that you've been constructive on ONGC for over a year. So quick word with the structural impact on OMCs on back of crude, and what's your call on ONGC and Oil India while we're at it?
How much time do I have?
You have 2.5 minutes.
Okay. ONGC and Oil India, it's a very simple, binary equation. Net realizations, as I've said earlier as well, are fixed at somewhere between $74 to $76 a barrel. So if crude actually goes even below the current levels that we are seeing, that is when a little bit of concern emerges, because even if windfall taxes are removed, your net realizations will fall below what you have been making, at least over the last year or so. I do believe that the correction in Brent and WTI seems to be a bit excessive. And if you look at the inventory levels, there could be a little bit more correction upwards. I still believe that $80 to $82 is a more reasonable range for Brent. Therefore, net realizations for ONGC and oil can continue to be at the levels of $74 to $76, which is definitely higher than the last decade average, and should continue to support earnings. The other more important equation is that if you look at their production plans, specifically for Oil India, the kind of performance they've put together in the last 6 to 7 quarters, their production growth has been much higher than their long-term averages. And the guidance that they've given for the targets of oil and gas imply that they could continue to deliver 7 to 10% production growth on an overall basis over the next 3 years. As long as they can deliver on that, I don't see a threat to valuations or to earnings, because that is pretty much above what they've delivered in the last decade or so. With ONGC also, it's more of a single asset story. The KG Basin asset has to continue to deliver, the guidance that has been given. There has been a little bit of delays here and there. And frankly, that's been the story for this asset for ONGC. But given that the asset is producing gas, they've added a couple of wells in the last quarter as well. And they are still on track to reach about 8 to 10 MMSCMD of gas and about 40 to 45,000 barrels of oil per day by the end of this year. I think if they can achieve anywhere close to that, the stock should continue to do well. Realizations, as I just said, the one bet I'm taking is crude doesn't collapse from here. If that happens, we'll be forced to revisit our earnings assumptions for sure. So that's the one looming threat, and that's something that we can't really help. I think you also asked about marketing margins. See, I think it's basically a story of what the integrated margins look like for the OMCs. Refining margins have definitely come off again in the last 7 days. They had been recovering quite sharply from the low levels seen in the first quarter. They had come back to about $5.5 from the levels of $3.5. I'm talking about Singapore margins. So, the decline again back to $3 levels is a bit of a concern. But at the same time, marketing margins, which average about 3 to 4 rupees a litre on a blended basis for 1Q, are trending at well over 7.5 rupees right now. So It really is a game of integrated margins being the same levels. Then OMC should continue to be okay.
All right. Thank you so much, Prabal. Always a pleasure to speak with you. That's actually the big story this morning. Just pull up Gujarat Gas and GSPL. GSPL's recovered sharply from where it opened at least, and that's what pre-show pairing off, but still about 2.5% up. Gujarat Gas is the cracker this morning, about 11% up. All right, that's one big story. The other big story, of course, is autos. Now, a whole host of auto sales numbers have also come in this morning in the last half hour or so. Before we get to a conversation with Mahindra and Mahindra on how their numbers are, let me go across to Puneet, who now has a more consolidated view of what August has been like for the auto sector in terms of sales. Yes, Puneet?
Well, thanks for that. So just want to talk about four-wheelers as well as two-wheelers now. For four-wheelers specifically, a very divergent trend. Mahindra and Mahindra are going 16% on a year-on-year basis versus Maruti as well as Tata Motors, who've fallen 3% in sales for the month of August. So a very divergent, very interesting trend. Maruti has said that, they've corrected some inventory in this particular month. So inventory data has fallen by 1 day to 36 days. Still above the 1 month that they keep, but this is the new normal, so as to say. And what's interesting is Mahindra and Mahindra, while, we saw the Thar launch in this particular number, there's no numbers that they've given out yet for this particular launch, but they have mentioned that, it's gotten a very strong response. What's other thing to key note is what's happening in the two-wheeler space as well. One of the key biggest winners in this particular category has been, Bajaj Auto growing by roughly 16%. That's double over the analysts had estimated of around 8 to 9% growth. The second key winner here is, of course, TVS Motors, 9% growth seen in this particular time in August compared to the same time last year. And the third one is Hero MotoCorp, which has grown by roughly around 5%. Eicher Motors has fallen by 5%. But I also want to address Ola Electric now. They've, registrations according to data on Vahan is roughly around 27,000 for this particular month. Now this is lower than 41,000 reported in July. So on a year-on-year basis, yes, they've grown very substantially, but that's also because of capacity addition. But this fall on a month-on-month basis is slightly concerning. We addressed that, a couple of weeks ago that Jefferies had put out a note where their market share has fallen from 46% in June to 33% now. So that's one of the key concerns to look out for. So stock might react, but the 2 or 3 key winners is, of course, Bajaj, TVS, as well as Mahindra and Mahindra for this particular month. Back to you.
Thanks, Puneet. And in fact, M&M is the conversation that we are going to continue because it certainly seems to be in a bit of a fast lane is Mahindra and Mahindra, especially the PV sales. Now, we caught up with Vijay Nakra. He's the president of automotive division at Mahindra and Mahindra to understand what aided these sales and the road ahead for the company. Listen in to the conversation I had with him.
We are very pleased with our performance for the month of August. We've been talking to the media and even to our analysts and investors that our objective is to deliver mid-teens double-digit growth, and we've been able to do that in the month of August with a 16% growth in the SUV business with a wholesale number of 43,000. I think what's augured and worked well for us has been, as you were kind of mentioning, which is a build-up to the pre-festive season. I think I would also want to mention that this is not just building up of stock at the dealers, that the 16% growth has been backed by strong retails. And if you look at the Vahan data for the month, if I include Telangana, which is still not on Vahan and contributes for about 4 to 5% of numbers, we are at 98% of registration in comparison to the wholesale. And we've also gained 2% share when it comes to retail data on Vahan. So it has been a strong performance both on billing and retail for us.
But Mr. Nakra, which means you are saying that the possibility of a strong September on the back of what you've just said is very distinct. You might actually follow up a strong August with a strong September.
Well, look, it's the indications or the signs are that the festive season should be good. I think as all of us have seen that, while the PV industry has been largely flat, the SUV industry has been growing. And if you look at YTD July, we still have to wait for August numbers to come out of the industry. The industry has had a 15% growth against more or less flattish passenger vehicle numbers. And SUVs, which used to account at one point in time 40%, then became 50%. In F24, it became close to 59.8%. If you look at YTD July, we now are at 65%. So SUVs continue to be, sort of the flavor of the year. And if I was to dial back a little bit into the last couple of months, I think we had elections, we had the budget. We had a strong summer because of which walk-ins were low. But as we start moving into the festive season with a very strong monsoon, and the data of monsoon clearly indicates that if we look at the long-term average, we are at 7% plus. If we look at 90% of the land for Kharif crop has been sown. The data for the food produce reaching the mandis is at 11% higher than last year, strong crop prices. So we believe that this augurs well for a strong upcoming festive season.
So we are seeing a fairly strong rural performance for two-wheelers in particular, starting to see this trend play out in four-wheelers. Whenever it does, four-wheelers also benefit. Are you seeing that rural play out better in M&M SUV sales already, or do you expect that to improve?
Well, I think we need to look at it with two lenses. So firstly, yes, has rural done well? It has. I think not only for us, for everyone, it still accounts for thereabouts of 50% of the total volume. But, in our case, given that we had a 3XO launch, a lot of the numbers, has been supported in urban and sort of, I would say, semi-urban markets for the numbers of 3XO. So for us, it's been a fair mix of both urban and rural. Rural had its share of challenges for the reasons that I mentioned above. We all know that a very large part of rural sales is linked to agri and two-wheelers, which is linked to monsoon. So like I said, I think we'll see, we should see a good pickup in rural sales as we get into the festive season.
Okay. So inventory low, asar hai that September might be a good month. You're expecting rural to do well. I'm guessing you are, you should be a pleased man. Let me try and talk about discounts. I was going to ask you about both inventory and discounts. Inventory, you already cleared my doubt. Discounts, are you offering discounts, or are sales, pre-sales inquiries strong enough for you to bank upon good sales without discounts?
So, I think two things to that. One, let me first answer your question on inquiries. And if I look at my inquiry data going up into the festive season, it's significantly up if I compare it to the average of the last 3 months. So we are seeing a strong buildup of inquiries as we know getting into the festive season. Discounts are not way out of proportion. They are very much in line with what one would typically do as you get into the season. It's not disproportionate discounts that is driving retail and sales for the business.
Got it, which is okay. Bookings, inquiries for a couple of things, a new launch, 3XO, and the Thar ROXX, which is kind of everybody's question. Could you talk about that for a bit?
In the last media and analyst meet, we said that we would not really we would stop putting out numbers
don't give me exact
or
numbers,
brand-wise.
sir, but give me some color.
I'll give you a color, exactly. I was coming to that. To give you a color, let me talk about 3XO, very strong inquiry and booking pipeline. We are working very hard to be able to deliver on the expectations. We are at full utilization of our capacity there. When it comes to Thar Rocks, very, very encouraging response. We've not yet opened bookings, but if I just was to look at the data of the sort of excitement around the brand, for all the content that we've put out in the digital space, social media space, we've had over 1 billion video views of the content we've put out. We've had close to 4 million website visits, lots of walk-ins at the dealerships waiting for our test drive vehicles to reach there and for the bookings to open. So we are very confident that with a great product that we've launched with the kind of pricing we've done for that product, we believe it will be one of our successful blockbuster launches.
Yeah, well, I see one of your ads on my channel too, and it's an interesting ad. So yeah, no surprise there. I have one final question, Mr. Nakra, which is based on, and sorry for not having these numbers handy, but I would love for you to tell this to me. Based on the base year's numbers that were there, and because the festive season gets altered, month on month, etc. But for the rest of the year, with all of that's happening, plus the base effect, do you expect the PV sales to look strong through the rest of the calendar?
Well, look, at the start of the year itself, if you looked at the data that SIAM had put out, we were talking about a 4 to 6% in the PV space, and the SUVs was, the kind of growth was being talked about was between 11 to 13%. So if I look at the performance YTD, I think PVs is slow, and I'm not going to give a guidance or a direction of what that percentage will be, but we know that it's in low single digit, and I think it will continue to be there. The reason also being the launches, the flavor is SUVs. As I said, it's now at 65% of the PV industry. There we've seen 15% growth in industry. So my guess is it probably will be in line with what SIAM has put out for the SUV numbers.
Well, that's M&M, but the stock isn't quite doing as well. I think the tractor sales hurting Mahindra and Mahindra's performance today at the low point of the day, despite PV sales looking okay, because the tractor numbers didn't look good. So that's to be kept in mind. The stock isn't exactly doing very well. What is doing well though? Let's just get the plate of the BSE 500 winners and losers, because the Nifty 50 is okay. We spoke about this in the morning that PCR is high, etc., but there's no need to take the foot off the pedal. For now, looking okay. Look at that. Gujarat Gas up about 8%. Aegis Logistics doing very well for itself, up about 7%. So that stock is not doing too badly. There is strength in Godrej Agro, Godrej Industries. So the Godrej Group seems to be doing okay for itself. And JM Financial is up about 4%. So that's the other one to monitor. What's not doing well? Dixon, Lloyds Metal, Archean Chemicals, Suzlon, APL Apollo, and a few others which are sulking. Paytm is sulking, by the way, 2.5% as well. As well, the Chinese ownership overhang gone away or likely to go away soon. That's still sulking a bit in trade. So those are a few names. Motilal Oswal as a stock and Nuvama as a stock both have done well. So the wealth managers seem to be doing okay. Not 361 though, but let's pull up individually Motilal and Nuvama and 361. So Motilal okay, Nuvama okay, 361 maybe not so. The wind energy companies though, it's not just Suzlon, by the way. Inox Wind and Inox Wind Energy too are relatively soft today. So that space, after having had a really good run and valuations looking egregious, is now just starting to look a bit somber. So bear that in mind. Meanwhile, Ashok Leyland numbers before we wrap up the show. Ashok Leyland numbers, the flashes on your screen. Domestic sales down 8% at 13,347. I'll quickly tell you though what the expectations were, because CV numbers were not expected to be great, mind you. So that's to be kept in mind. But this 8% downtick at 13,347 seems a bit underwhelming for Ashok Leyland. The expectations were about a 3% YOY downtick. That they have come in with an 8% YOY downtick is not looking all that great. So no surprise that that Ashok Leyland also is looking weak. It's our auto day. I think during the course of the day, my colleague Puneet will keep us updated with all that's happened in autos. But for now, from the team that put India Market Open together, thanks so much for tuning in. Up next is Talking Point. My guest today is Abhay Agarwal of Piper Serica.